Good morning, everyone. You're all very welcome to our Monday morning market preview. So, of course, we have had a very volatile end to last week. Quite a different bits and pieces coming up this week in terms of economic data, in terms of the political scene, and of course, on the earnings scene as well, where we have a lot of the heavily weighted US-based stock market companies presenting their Q3 earnings this week. So I suppose first things first, obviously last Thursday we had the resignation of Liz Truss, and of course then the instability within the UK political system continues, and the volatility within UK asset classes continues. And of course, over the weekend, markets are hedging their bets on who is going to be the new PM next week. Now, of course, the voting is said to take place this Friday. Now, whether that happens or not is, I suppose, yet to be determined. But of course, over the weekend, we did hear that Boris Johnson, ex-Prime Minister, who was touted to be in the running again to run for Prime Minister, has pulled out of the race. So it does give us the viewpoint that it looks like that Rishi Sunak, who was Chancellor under the Boris Johnson Prime Ministerial time, is now going to be the Prime Minister, and obviously the third Prime Minister of the year. Now, of course, what does that mean for the markets? Well, it generally means that right over the last 6-8 weeks or so, the UK has seen incredible instability in the markets. The pound has had a flash crash, and the FTSE, the main exchange index or composition index in the UK, has been very volatile. It did obviously bounce off the 6,800 lows. So I suppose Sunak, by a lot of economists, was kind of touted as being the best fit for the position because of his previous experience. Now, of course, as things currently stand, he is obviously the favourite. Penny Mordaunt is I suppose, the second favourite. So I think with Rishi Sunak taking control, it gives a little bit of clarity to the situation. And of course, markets don't like uncertainty, don't like a lack of clarity. They want to see structure, and they want to see strong leadership. Otherwise, then you see currency devaluation, you see volatility within the markets in that location, and of course then heavy daily swings of volatility then ensues. So it's very much a case of watching that narrative over the course of the week to see, does he actually get elected? Does he get confirmed as next PM? Because I think at this point in time, it's a last chance saloon really for the Tory government, that if this doesn't work, the likelihood is they're staring down the barrel of a very heavy defeat by Labour in the next general election. And of course, even at this moment in time, the opinion polls states that Labour has majority for the next election. So if the next election was held this week, Labour would win in a fairly strong landslide. So it's, of course, has to be relevant to that. Now, of course, moving from the UK political scene to what we call the earnings, just moving across to the earnings this week. Of course, Tuesday, Thursday, two very important days for the market. So Tuesday, we have Microsoft, Google, so Google's parent company, which is Alphabet. We have Visa, Coca-Cola, GM, UPS, all reporting earnings both before market opening and after market close. So that's going to be an interesting day. Wednesday, we have also Meta, Boeing and Ford, of the kind of the main companies. And of course, on Thursday, blockbuster day, we have Apple, Amazon, Intel, MasterCard, Shopify, and of course a few others to name. Now, of course, if you are watching the narrative associated to higher prices and freight costs, you should also be watching to see Merrick's performance, because they do a lot of work, particularly in the freight sector, freight transportation and logistics. So obviously a very busy day for earnings. As we know, we posted in our Discord group today that Apple and Amazon, Alphabet, are Microsoft, kind of the 4 or 5 big heavily weighted stocks in the major composition indexes in the US. So the S&P, the Nasdaq, the Dow Jones all have significant weighting in these stocks. And of course, if we were to run to the Slick Charts website, which I'm just sharing with you now, you would see the overall stock weighting of these companies. Okay, so just very quick insight. We can see that Amazon and Apple and Google and Alphabet have very strong weightings within these different composition indexes. So alone in the S&P 500, Apple and Microsoft combined take up nearly 13% of the performance within that index. Of course, if Apple does well, that's going to be generally a positive thing, and Microsoft do well, it's going to be a positive thing for the indices. It's going to see the indices perform quite well. So for those who are unaware of, I suppose, the kind of linear intricacies of these indices. Now, of course, Nasdaq, similar scenario again. Apple almost 13.75%, Microsoft almost 10.5%. So you can see there 24% of the Nasdaq composition is in Apple and Microsoft alone. So when you tally these up across the board, like the big five, you're talking 40 to 50%. So you know that if these companies perform well, the indices on the back of that will perform well. So it's just being aware of that bias as well. So moving across then to, I suppose, the last thing today before we look at kind of some of the charts, the economic calendar, we do have notes out today in the US this afternoon. We do have indexes this morning, so the PMIs, compositions, the manufacturing, the servicing outputs have all kind of come out this morning in the European zone. Now, of course, you can see all of these under, as expected, showing that manufacturing is down, service output is down, and the overall performance within these, I suppose, sectoral outputs is down. Now, normally speaking, anything below 50 is contractionary within the PMI. If you see anything associated to PMIs, you want to see it below 50. If above 50, should I say? If you see it above 50, it's expansionary. There is growth. If you see it underneath 50, it's contractionary, and that is a very, very strong recessionary tool. Now, of course, what are we seeing? 47s. We have seen the French Global Services PMI is marginally above 50, but still down. So all of these are either down or well below 50 on the index, which shows that, structurally speaking, from an output perspective, that is obviously a very, very negative sign when it comes to growth, broadly speaking. All right. So today now we do have a number of other figures. We have obviously data out, as I said, in the US. So that'll be an interesting one to watch. The global composite in the US, 49.5, 49.1. The manufacturing is still holding itself above water, but I suspect if we start to see manufacturing and services both consistently remain under 50, that's again alluding to this narrative. We've had negative growth. We're now seeing negative PMIs. And of course, now the idea of higher prices is going to factor into stagflation, or this recessionary mandate that we've been kind of talking about in these markets over the last number of weeks. All right. So that's kind of it for today in terms of the markets, in terms of the broader movements. I suppose when we look at last Friday, we did have obviously Bank of Japan intervention again, and we saw that move in the Japanese yen. Now, of course, it's not immune to just the Japanese yen. I think it's any of the yen crosses, the like dollar yen, pound yen, we had significant volatility. Now, if we look at the markets broadly, just starting out, now tomorrow we will be looking at the pound, I suppose the nuclear nuances within the pound, the volatility. And of course, we can see, obviously, the yield story is continuing to play out, broadly speaking. So that is obviously going to be important now for the next week or so within these markets. Obviously, looking at the dollar narrative, we're looking at the broader compositions within these markets, and then being able to try and get some sort of rationality or clarity to these markets. Now, of course, the DXY, we had that initial sell-off on Friday. There was a rumor going around on Friday that the Fed is looking to now pivot, and there was Wall Street Journal published an article to say that they are now turning their tide on rates. Now, I don't believe that for a moment, because in the last Fed dot plot, they made it very clear where their narrative is. We know core CPE is still remaining very, very high. We know the headline is even higher than that. Their goal mandate is full employment and stable prices. So their goal to tackle stable prices is bringing down this inflation print. So that article that was published last Friday by the Wall Street Journal, I do take that with a pinch of salt. Now, of course, that doesn't necessarily mean that the markets won't rally. Of course, markets do tend to move off rumors and this idea of buy the rumor, sell the fact, and sell the rumor, buy the fact. So, of course, what you tend to have is markets trying to price in the element of consideration within that. And then, of course, when it doesn't deliver, then that's where the buy the rumor, sell the fact comes into play, where you get that impulse into the news event. Then it turns out to be not factually correct or not factually true. Hence the reason where it's quoted as a rumor. And then you see the markets ultimately unwind the initial move or the initial impulse that took place. So, as we speak at the minute, the DXY broadly very, very volatile last week. We had that initial sell-off on Friday. We are getting that pullback. So if you look at kind of the DXY, you can see here structure. Broadly speaking, we have, I suppose, consolidation, okay, over the last week or so. You can kind of see that there. We had that flash impulse out to the upside, very, very clear rejection. Dollar rolls over, takes the lows on the liquidity. We are now pumping back into this 113 level again. I would be looking at this area here around 113 to be mitigated, to be taking out in the early parts of this week. Now, of course, whether that happens or not, let's wait and see. But specifically speaking, when you look at the 1 hour charts, you can see there consolidation, takes the highs, takes the lows. We are now flagging back up into this region. So we do have a 1 hour area up at 113.45. That will be the upper extremity of the move. But focusing on the 4 hour chart for a second, this area here around 113.10 would be a very, very ideal scenario to see the price action come through. Now, of course, if that plays out, how does that affect the broader markets? Of course, if we look at the euro, we can see that very, very quickly. On the euro, we had that very, very sharp impulse last week. So this on Friday, very, very sharp wick. Then, of course, we get that recovery. We get the recovery. Price action structurally takes the highs, of course, and is now correcting back into this region down here. So if it's a case the DXY continues to strengthen back into this 113.10 region, we should be looking at stronger dollar against these base prices. So against the euro dollar should probably tick lower marginally. Okay, pound should or could potentially tick lower again, and dollar yen, while dollar yen should revisit or kind of pump back into these highs. Now, structurally speaking, on the yen, we're starting to see some similarities in the price action. What happened here? Consolidation. We had a run up, BOJ intervention, markets sell off. What happens? Create that new dip opportunity. Markets rally back into the highs and then continue turning higher. What happened on Friday again? Markets rally up, BOJ intervention, pullback. Markets are rallying up again. So it shows that these BOJ interventions that comes into play are very, very temporary short-term moves in markets. You can kind of see it here. There's one. You can see it here again. If we go back over here again, there was more BOJ interventions or BOJ interventions here. Let me just scroll out to the daily. We did have one way in this region as well. So I think that this day here from the 136 move in July, there was BOJ intervention there as well. So anytime there's been BOJ intervention in the last 3 months or so, it has been a temporary sellback or temporary relief rally in the yen for the trend to ultimately continue. And of course, if you look at the daily, what's happening? That very, very sharp volatility, very, very sharp volatility on Friday, markets coming back into this region here at 150. So from that perspective, I would be worth keeping an eye on this area here around 150 on the daily close today. And of course, even as high as 151 if the markets do tend to extend even further today on that. So worth keeping an eye on the yen, particularly from a fundamental perspective. And of course, then even going back to cable as well, we will be looking at the volatility within the pound. So last week, of course, when we were looking at the price action, I did mention this quoted area here, this order block. We did come down to hit it. We rejected it. Very, very sharp bounce. And then, of course, on Friday, we had that massive run up back into this region. Now, of course, on Sunday night on the gap open, we did gap higher. Of course, you can kind of see that there. We closed at 113. We opened up around 113.70, 113.80. So quite a sizable gap open there. And of course, the markets has closed that gap now pretty much. So I suppose now with that stronger dollar against the pound short term, will we see another move back into this low down here around 111.50? Is, I suppose, the interesting level. So we've obviously mitigated this. We haven't mitigated this level here at just underneath 110. But would it be surprising to see the markets drift lower? So if that dollar remains strong today, my bias is probably to see another move back into this region. And then, of course, if we reject that 113, trying to maybe see that type of move play out again. So from an OB perspective, worth keeping an eye on this area here again. So that's obviously where the bullish impulse originated from. We do have a shorter term one here as well at 111, just underneath 112. So this region here is kind of what I'm looking at. Short term area 1, deeper level of 2. And those would be the two focal points that if the dollar does remain strong, those would be two price points that I would be looking at from a smart money perspective today. So then moving across to some of the other asset classes as quickly as we can. So we can see here that the gold had a massive run up on Friday. So that massive run up again, very, very strong order flow. So you can kind of see it here. We had that consolidation. We completely obliterated that move on Friday. Very, very massive, strong run up with the weaker dollar, with the stronger market movement. And of course, we came all the way back into the 1668 level. So this order block area that was rejected here, we've double mitigation, we rejected it again. What happened? The markets has folded and we're now selling off again. So from this perspective, I would be worth keeping an eye to see, well, if the markets continue to drop off and continue to sell off, the likelihood is we're going to revisit this 1620, 1625 level again. Now, of course, what happened? This was the last selling candle before all of this strong bullish bias came into play. So, of course, if we do sell off, this would be the region that I would be looking at. So kind of into the 1620, 1625 level would be an interesting area from an SMC perspective. Now, of course, the overriding trend is still very much bearish. So we had the mitigation, we had the consolidation, we had the break of structure, we had the flag back up, we've had a secondary mitigation, we've actually technically had a triple mitigation because this is 1, this is 2, this is 3, and the markets is now obviously unwinding fairly sharpish. So interesting to see nonetheless. I suppose in the oil market as well, what are we seeing in oil? Again, a similar scenario. So oil obviously had that initial break, flag back up, in extenuated move to 82. We flagged back up again initially. We rejected this. We gapped down. We got a fill again. And markets actually took the liquidity on the highs before ultimately unwinding. So you can see how choppy even the oil markets have been over the last few weeks, or even last week. Now, again, this idea at 82, 82.50 is still strong. So 82, we have been wick rejecting. We have been holding above. Now it's a case of, can the markets close out of this area? If it closes out of this area, this gap here should get filled and we should have a run at these lows down here at 77. So from my perspective, it's very much a case of just waiting and watching to see now, does that move now extenuate? Does it actually now take place? All right. So finishing up today, we will obviously look at the stock markets. So very, very quickly, I know we looked at the select charts. We looked at the broader markets, of course, on Friday with that rumor regarding the Fed pivot and the easing in interest rates. Obviously, what happened? The S&P rallied. Again, we took out highs. So you can see how the catalysts are the cause for this bullish move that we've been kind of talking about. We had the first wave back into this level we talked about 2 Fridays ago. We had the initial impulse. We had this move last week. So Friday, in our video, Friday morning, we did discuss the idea of this. So we had the pullback into the 61.8. We did just about reject the 71 area, the kind of the upper levels of this zone, and of course we had that very, very sharp run off again. So from this perspective, of course, if the dollar continues to strengthen back into this region, that will give the next pullback to the downside, at which point then we will obviously be looking for markets to pull back somewhere into this region here. So between 36.70, I think is a reasonable assumption, back to the lows of around about 36.50. Now, do we foresee an opportunity to 36.50 or just slightly underneath? Absolutely. At these markets, we have to be very nimble. We can see how the markets are reacting and rejecting very, very quickly. So we have to be nimble as a result. So as the markets pull back today, of course, I'm watching some of these levels down here just to see how do the markets react and reflect in real time. And of course, again, similar scenario, we can see here that we've got the next area of interest down here. Now, whether we get to the lows at 36.48, let's wait and see. But of course, watching the price action as it develops through the course of the day. So again, similar to the S&Ps, this is the chart from Friday. Nasdaq had that runoff, obviously bearish order flow, gets down to the 61.8, doesn't quite get to this area of interest. And obviously, of course, what can you see? Markets tick up very, very quickly, takes the highs of the initial impulse from Tuesday. So last week's highs were broken very, very quickly. And of course, we're now seeing that fade as a result. So markets now correcting again. So you can see here, broader consolidation, hunt, takes the highs, flags back into, takes the liquidity. We're now starting to see this trend elongate. So what the bias will probably be is we'll see more bullish bias into the Fed meeting in the 2nd of November. This pivot rumor that was started on Friday will probably be erased and you'll see markets ultimately unwind again. So that's likely how the markets use rumors more so than news, because I don't believe that is a factual news event, to move markets in a position to generate pullbacks. And of course, then we can see the smarter play coming through with the liquidity, with the market makers, and of course with the order block smart money play. So as I suppose short term, again, similar to the S&Ps, as price corrects, worth keeping an eye on this region. Of course, if we were to apply the similar scenario as to what we've just done on the S&Ps, very, very quickly, we can see that the 61.8 is up here around 11,100. Would it be conceivable to make a move back into the 11,000 level? Well, if the dollar continues to remain strong, then the likelihood is we will get a short-term pullback, we will get a short-term move, and then we'll get the next elongated move back up into the upside again. So let's just see how that one plays out. Of course, on Friday, with the Dow Jones, we did break under 30,400. We did come back to this 30,100 level on the 61.8. And of course, very, very strong bounce from there. New highs, 276 extension. made. It's the only one of the three that made the extension. And of course, now markets are correcting again. So the likelihood is you'll probably see, again, if the dollar remains strong, you'll see the Dow Jones Industrial Average probably filter back into this 30,400 level down here as a result. So worth keeping an eye on that one. Again, just for symmetry and I suppose for purpose, very, very quick move in markets. And of course, this region here is the region that I would be kind of looking at. Now, of course, the DAX, unlike the other three, didn't make new highs on Friday. Well, it did marginally, but of course, it didn't sustain highs. It wicked, rejected, and came back underneath. So now we're kind of flagging back into this area again around 12.7. And of course, at this point in time, would it be possible that the markets actually break back underneath this 12.7 level and ultimately play this short-term play? So you're seeing high, you're seeing rejection, right? We're now seeing the DAX kind of stabilize. We're not seeing the DAX continue to move to new highs like the likes of the Dow Jones, like, for example, the S&Ps and the Nasdaq. So being a little bit more cautious in this one. And then, of course, last but not least, the FTSE play. So the FTSE play, again, if we use the 1 hour charts, so this was the highs from the early parts of October. So this is October month highs at the minute, just underneath 7,100. Order flow, you can see the short-term higher highs, higher lows, new higher highs made again. We got that close. We gapped higher yesterday. We're now pulling back. So this region here around 6.9 is worth keeping a close eye on today on the markets to see how do we react around this region. Okay, we are pulling back quite vividly, quite sharply, but of course from a trend perspective you can see how it's playing out, and from a smart money play you can also see how it's playing out. So that's a 1 hour chart. If we look at the 4 hour as well, we've got a 4 hour order block here at around about 69. So this region here between 68.85, 68.90 up as high as 69.05 is the region of interest to be kind of watching out. Now whether we get to a 1 hour OB is, I suppose, questionable. But of course, even the 4 hour play, if we plot that there as well, you could see how the markets could very easily not go to the 1 hour, take the 4 hour and use this as the bottom for ultimately a market correction. But of course, if the DXY continues moving stronger, you will see these indices continue to drift lower as well. So just be aware of the correlations, the fundamentals within these markets if you're tracking that throughout the course of the day. Okay. Again, similar scenario. If we use just the fibs very, very quickly here on this one, we can see how obviously we're seeing a deeper correction. We have technically done this area of interest here, but of course, let's just see, do we get a 4 hour or 1 hour OB? Okay. So I'm just being patient this morning myself. But I suppose we want to have clarity. You want to have structure. And of course, in the back end, understanding the risk elements associated with these markets this week. All right. So everyone, we will be back tomorrow. We'll be looking at the pound, pairs tomorrow, specifically off the back of the Sunak news, and I suppose looking for updates and developments. And of course then this week we will obviously be factoring through and watching the earnings season very, very closely, just to, I suppose, get a closer assimilation of what's actually happening within these main primary asset classes. Have a great week, everyone.